Have you ever invested in the stock market? Do you feel like you just don't have the technical know-how to be successful in it or with investing in general? If that's you, you're in luck. We'll be discussing a particular technique in today's episode of BTP Fusion, so stay tuned. What's up, you guys? This is Derek West from BTP Fusion. On BTP Fusion, we love to talk about the synergy between business, technology, and personal finance. If you want to learn more about how tech can enable business and personal financial growth, gut punch that subscribe button, and don't forget to click the notification bell so YouTube lets you know when we drop more great content. Everybody starts everything from the beginning. Nobody was born just knowing how to invest. It's a skill you have to learn and exercise if you want to meet your financial goals. There are tons of ways to lose money in the stock market. If you're not careful or knowledgeable, you can end up in a much worse position than when you started. Now, I wish there was a way to invest my money where I didn't have to know much about various companies or how the stock market worked and just make money. Well, luckily for you, there is. And in this video, we're going to go over one of the easiest ways to invest your money. An index fund. First things first, what is an index fund? An index fund is basically a group of investments. You put your money into this fund, and then you own small percentages of those investments, typically companies, and then your investments will track that whole index instead of being just tied to that one stock. Simple? Simple, right? There are a couple of upsides to investing in index funds. Namely, they have low fees due to their lack of complexity. They're simple to put together, simple to manage, and there isn't much overhead, compared to traditional mutual funds which require management from a human stock picker to ensure that the fund beats the market performance. For an index fund, you're basically getting an entire portfolio of stocks that automatically get balanced and adjusted over time without doing any work, and you pay as low as 0.4% annually in fees. The second advantage is diversification. Diversification is a good goal to have when investing your money. The problem with owning 20 individual stocks, though, is all the acquisition costs associated with that. And also, if one of them goes negative, they could really impact the total worth of your portfolio. With an index fund that tracks the S&P 500, you'll get a basket of 500 stocks, which is an extremely diverse portfolio. If you purchase and hold for the long term, as the value of the individual stocks goes up, so will your net worth. The third advantage is that you'll save a ton of time. Due to the simplistic nature of investing in index funds, you'll save countless hours researching stocks, figuring out the right time to enter into a market and exit out of said market, listening to business news for the latest market moving tidbits, and so on. Now, that being said, it isn't all sweetness and light, unfortunately. Keep in mind that index funds do lose money, so don't expect to always have your portfolio go up in value. There will be times when it will lose value, significant value as a matter of fact. There may be entire years when your investment in said index fund is negative, as happened with a lot of people in the 2008 recession. But remember, if you're investing this way, you're investing for the long term, not the short term. Also, another thing to keep in mind, investing in individual stocks or basket of stocks can be more volatile. More volatility means more profit for the prepared investor. You can make significantly more money on a stock that goes up 200% over the course of 6 months than you can on an index fund that only goes up 8% every year. That said, that requires a ton of research and understanding of economic conditions and the fundamentals of the company. But it is possible, and people have made money doing it that way. If you think you're smart enough and have the work ethic to try, more power to you. Also, the more money you have, the less efficient investing in index funds becomes. One could argue that a guy like, let's say, Graham Stephan would be much better off creating his own private index fund than by paying someone like Vanguard to do it for him. But that is neither here nor there. I'll link to an interesting article that makes this very point in the description below. Anyway, this is about investing for dummies. If you have no clue how any of this works, and you still want to make money, how do you do it? Well, a common way for people to do this is the 3-fund investing method. Now here's where it gets exciting. You know, about as exciting as investing in index funds can get. Are you prepared to grasp the deep complexity that is the 3-fund investing method? Get out your slide rule, warm up your scientific calculator, and dust off your abacus for backup. This is gonna get deep. Ready? The 3-fund portfolio is a portfolio of 3 index funds. Well, that was a bit of a letdown. In any case, one thing that seems to be certain over the last couple of years, the more complex your investment strategy, the more likely it is you're gonna lose money. So just keep it simple, stupid. Like I said, investing for dummies. But back onto the strategy. Of those 3 funds, pick 3 asset classes. Most people recommend picking your index fund in US stocks, US bonds, and international stocks. All broad categories. But you can pick more specific fund categories. But again, consider keeping it simple. The above recommended portfolio will ensure that your results match the overall market, meaning that you don't have to fret over any of the dumb stock picks that you have to make, and you can just watch the market go up and of course down. Now this means that you'll earn average returns, which means you'll be better than 99% of stock pickers. You'll determine how much money to put in each asset class. That is to say, if you're older, invest more into US bonds. If you have a longer investment window ahead, invest into US stocks a bit more. Consider the most common 3-fund stock portfolio allocations. An older investor may consider 80% or more invested in bonds, while a younger investor would have 80% invested in stocks. Your average investor just getting his feet wet may consider an equal portfolio of each. Now, a video on index fund investing wouldn't be complete without an actual example of funds picking from the top 3 index fund brokers. From Vanguard, for US stocks, the Vanguard Total Stock Market Index, VT-SAX. For international, so Vanguard's Total International Index Fund, VT-IAX. Vanguard's Total Bond Market Index Fund, VBTLX. Now from Fidelity. The Fidelity Zero Total Market Index, FZROX. Awesome name. Fidelity Zero International Index Fund, FZILX. The Fidelity US Bond Index, FSITX. And who can forget Charles Schwab? The Schwab Total Market Index, SWTSX. The Schwab International Index, SWISX. The Schwab US Aggregate Bond Index Fund, SWAGX. All will be linked in the description, or you can look them up on Google or your favorite search engine. Signing up and allocating capital in any or even all of those index funds is as easy as signing into Facebook or Google. Not quite as easy as clicking the like and subscribe buttons on your favorite BTP Fusion video, but close. Also, keep in mind, I'm not a financial advisor. Investing in anything is inherently risky. Also, no risk, no reward, but all funds and investments have a risk of loss. You shouldn't listen to random people on YouTube for financial advice, and you should instead consult a certified financial planner. This video is for entertainment purposes only. In any case, consistently investing in index funds is a great way to start out on your investment journey, and it's a great way to build wealth in general, the slow and steady way. So, that's it. How to become a millionaire investing in index funds. If this video brought you value, don't forget to like and subscribe if you haven't already. And don't forget to click the notification bell, because up next, we're going to talk about the recession specter. So stay tuned for more great videos for BTP Fusion, and we'll see you guys later. Take care, everybody.